All right, welcome back once again. This video I'll be covering the Skyways Air Services IPO, which is now open. It's actually open between today, as of now, today as I speak, August 24th, 2026, to the next 3 days until Thursday this week, which is August 27th. The interesting thing about this IPO, I would go right away into the details of this IPO, is that almost like the ratio of the fresh capital versus the offer sale, uh it's at a good ratio, which is what makes me feel this IPO is a green flag to me, so to speak. So basically they are raising about 2.89 crore shares aggregated around 398 crores rupees at a fresh capital versus the offer sale, which is at 184 crores over here, which I'm mentioning over here. So essentially, if you think about it, out of the 582 crores that they're raising, 398 crores is actually going into fresh capital, which the company wants to raise, and about 184 crores is going to the uh, previous investors who feel perhaps that the company is matured and hence they would like to exit the company, and by the company going public they would be able to come out of the company and liquidate their shares. So the analogy that I'm trying to give to you is that if you're investing 582 rupees into this company, 398 rupees is going into the operations of the company and about 184 rupees is going into the pockets of the investors who have invested into this company so far. But the story doesn't just end there. You need to understand that whenever we are dealing with an IPO, it's important to understand what kind of your where is that money is actually going to. Is it going into working capital of the new kind of operations which this particular company will be involved in, or it's sort of clearing of previous debts which the company might have incurred until the time it has until its desire of going public, so to speak. And let's look into the details one by one. As I've mentioned, the IPO details is basically like if the total issue size is about 583 crores, 399 crores, about 399 crores is going into fresh issue, and 184 crores is going into off of sale. Again, I'm giving you the analogy once again. So basically, if you are giving 583 rupees to the company, 399 rupees is going into the working capital or basically clearing of previous debts, and 184 rupees is going into the investor's pocket, the previous investor's pocket, like venture capital, private equity, the previous investors who've been a part of the firm, hope like maybe from the start of the company in itself, like when it started being up, when it started operations, when it started operations, yeah. Moving on, basically they are raising about 4 crore shares in the capital markets, which is interesting again. The reason why I say interesting is because when I go a little down, what's intriguing to me is that the objects of the issue behind why. Basically, when you say IPO objects of the issue, it basically means the reasons pertaining to why this IPO company is going public. So whenever an IPO is going public, it has to declare the reasons behind why it's going public. And for me, the red flag in this particular company is that the prepayment of certain outstanding borrowings availed by the company and subsidiary foreign container line. So essentially, about out of the 500, out of the 346.79 fresh capital that it's raising, 216, about 217 crores is going to its debts. So I think that's a bit of a concern to me when I'm dealing with a company that is heavy in debt. So if a company is heavy in debt, which is okay, there's no problem with that because this is uh, very very capital intensive company, because basically because this company deals with freight, and it's ranked quite well in the industry, and it has a lot of goodwill in the industry as well because it's got 4 decades of experience in the freight industry, and it's also ranked number one. So, with all these credentials in place, my only red flag is that most of the most of the fresh capital that is going out of my pocket is actually going into the is actually going into clearing of debts. So, on a very objective scale, I will not invest in this company because the nature of investments of where my money is going has not been very clear over here. Funding incremental working capital requirements of the company, which is fine. But what is the working capital requirements? What are those details regards to what this company is sort of investing into? About 130 crores are being invested there, but what are those investments going to be? I'm a little wavery about that. So, which is why I think while analyzing this IPO, I think I have my concerns behind how this company will perform eventually because despite the company being heavy, fresh capital heavy, I would still be concerned as to how much of that money is going to fruitful use. Essentially, if you think of it, from the 346 crore rupees that's being raised from public markets, only 130 crores is being fruitfully used. So I think I'm a little concerned with that because about 217 crores over here is going into debts, and then another how to say 184 crore rupees is going into offer for sale, which is going directly into like money is being exchanged hands, like money is exchanging hands from your pocket to the investor's pocket. So I think I'm a little concerned with this company in terms of how it will perform eventually, but that's just my opinion. The the fundamentals seem very strong, but then performance might be very dicey. I might not know where this company is trying to get into eventually, what it's signing up for, because it's going public. So that's my thought for today. Until the next IPO analysis video, until next time, thank you.